All right, so today we want to go into the chart to this December 28th, Sunday, December 28th, 2025. So we want to see what the coming week is going to bring about, talking about gold. So we want to go into the chart and see what you should be expecting from gold and the way we should trade it between starting from tomorrow, Monday. In fact, this night, sir, but specifically Monday, 29 December 2025 to January 2nd, 2026. So we want to see what we should be expecting from gold and how we should trade it. So let's not waste too much time. Let's go straight into the chart. So it's time to get to work. This is daily time frame. This is daily time frame. However, let's go to weekly time frame, since we'll be looking at what should happen the coming week. Hopefully, I should be able to post this video before market opens by 12 a.m. All right, so let's go. So from what we are seeing from the weekly time frame of gold, so this is the brokercapital.com. That's what I'm using to make this analysis. Okay, so we want to see what we're expecting, and it's still very, very bullish. Like you can see, as you can see, this is very, very bullish. In fact, last week closed seriously bullish. So which means they're still looking for buy trades. That's what we'll still be looking for. Where we'll be looking for buying opportunities. All right, so let's go to daily time frame. Going to daily time frame. This is daily time frame. Remember, for me, I actually make use of combine a kind of the conventional trading strategy and the smart money trading strategy. So I'm looking at the other block, but I'm still looking at support and resistance and trend lines and all those things as they come along. Where I see them, I'm going to look at them. So talking about that, we see that the top here was the previous high for gold. So it was at the time a very strong resistance, taking 1, 2, 3, 4 days, taking 4 days before, in fact 4 days to hit that high, and then it takes so many days before it could, after going back, to come back there. And these candles here, 1, 2, 3, 4, 5, 6 days when it get to this place before it was able, is it 6 days or even 7? 1, 2, 3, 4, 5, 6. Okay, 6 days. The 7th day eventually. So the last time he tried it was in October 2025. Then the last time it got to that point and couldn't break it yet was December 2025, Monday 22 December 2025. This one was like I think Tuesday 21 October 2025. That's how many October, November, December. So it's like close to 3 months, about 3 months, like two before it came back and break it. So I'm seeing it as a very strong resistance area, talking about conventional trading. But there's another thing I'm seeing here. I can see that there is another block here. Look at this point, the other block. Let me use, should I use okay, let me use the resistance. Let me use black. Let's paint it black. Let's paint it black. All right. Sorry, this thing is come now, black that they look for. Come on. So wasting my time, man. Why can't they? So I want to paint it black. Let's go for black. So that is the resistance. So this resistance broken, I expect it to turn support. Now for daily time frame traders, for swing traders, we're expecting this market to come back either to this other block or to retest the previous resistance. We could call it previous resistance, turn support. We expect it to come back and let it be retested as support. That is support at the daily time frame. So meaning that this zone as a whole, the zone between this yellow line and the black line, is like the key zone that we're looking at. If it comes back to that point, and we see an entry trigger for further buy trade, that means we're going to keep going up again. That's for daily time frame. Remember, this is for swing. We're not expecting this to happen one day, though it can happen. This is good, but that's not what we're expecting. So let's now go to 4-hour time frame to break it down, meaning that we are either waiting for the market to come back to retest the previous resistance, confirming it as a support, or hit the other block, that break above this or broke above this high. You see, this candle actually breaking. So I'm using the other block as the candle before the candle that started the move. So this candle is one that started the move, because this is one that tear off this resistance here. Did you see that? All right, so let's now go to remember how to trade it for swing traders. Please, you wait patiently for the market to come down back here and then give you an entry trigger, or if you're using a pending order, use a pending order and then take it back up, and that's you just be packing fund. If that you can be patient, you can patiently wait for that. That's for swing traders. Let's still go to 4-hour time frame and see what is happening in 4-hour time frame. All right, so in 4-hour time frame, we still have our resistance here. That is for of course, for daily time frame. So we're going to leave that like that. You can see it, area of former resistance that we're expecting to turn support now, but it has not been tested, right? Okay. But for 4 hours, we're having this area was forming as resistance before. So what we want to do is to refine the other block. Refine the other block and see if there are other blocks we are going to be seeing. All right. Remember, the black is expectation for daily time frame. All right. So this is the new order block for according to 4-hour time frame. So we're expecting the market to eventually come back here again. This is still for swing traders that we're expecting that before they can take a trade. Now, this point now that serve as resistance, that's what we are called. I choose to always call this place invisible order block. So now this is my order block. What am I using there for? So what I use this my other blocks for is simple. I simply just watch the market come to that place. I want to see the reaction of the market and see if it can give me an entry trigger to take the market, or or to break it down and begin to retest it in terms of for a sell trade. But for a buy trade, I want this market to come back. I want to see the reaction. When you get to each of this my other block, then I will see the reaction and take the market according to the reaction. All right, so and I see this point again as another block. I treat this kind of point as another block. Remember, I'm not just using the conventional smart money strategy, but what I do is that refining it the way I have observed it work in the market. So all these are my areas of expectation, and it will surprise you to see that I also treat this place. Look at this place as another block again. I call this invisible other blocks. So you can see that I'm treating it differently from the way the conventional smart money treats it. Based on the experience I've gained while I was learning, that's the reason why I treat it like that. And trust me, I've been using this and it's actually been working wonders. Remember, it's just an area I pay attention to when the market is approaching there, so that I'm at alert and I can react to the market depending on what I'm seeing there. So, but this other block has been tested. You see it has been tested. All right, it has been tested and it's going. That's why you see after testing the other block, you can see it did not come to this place, neither did it come to this place, or even here that is very clear other block. All right, so like I said, this is invisible order block, and now you can see the market came back and tested it, and then since then has been going up and up. You see that, and it has gotten to this point again. So that's why when I say invisible order block, it's based on my knowledge and from what I've gained from all the time I've been watching the market and trying out all this like that. And you see, like I said, it didn't come back to all this clear order block, and it stopped at that invisible order block. And you see what it did, and since then I've been going up. So now I'll be waiting for it to retest it again, retest it where it's forming, becoming like a support. You get it? I want to see the reaction. Like I said, all this I just leave them, marking out the areas where I will pay attention, so that I'll be at alert when the market is approaching there, so that I'll pay more attention as at that time, and then see what the market is doing at that point. Because I can go to lower time frame and go and watch whether it's breaking structures, whether it's doing higher highs, whether it's doing any kind of behavior that would tell me the next thing that is going to happen from that point. You get, so that's why I mark them as. For instance, now let's go to this. See this. This is another order block because the market has broken above here, and this is the point that started it. You get. All right. So what are we expecting? This is 4-hour time frame. So we want to see the market retest this order block here. Let's see the reaction before we take action, or wait for it to retest here. Rather, the first time is to come down to this order block because I have not retested. I mean the first one here, the topmost here, and then later on we want to observe the market and see if it's going to come to this point. Like I said, we watch all these points to see the market reaction, to tell us whether we should be buying or we should be selling, depending on what the market is doing. So the foremost place, the most important place now we're going to be paying attention to is this order block. When the market comes back to it, what is going to do? Is it going to break it so that we're expecting it to go to this one, or is it going to start doing higher high, or is it going to give us some behaviors that will tell us that we should be buying at that point? Remember, we're expecting buy, but where is it going to come to if it's coming down? So that's the essence of all this. Let's go to 12-hour time frame. Now we are in 12-hour time frame. So what we need to do first is to refine this order block. So now for this is where the order block is. After breaking above here, the other block is where? This is the candle before the one that started the move. All right. Now, this invisible order block is still here. So we still leave this one here, coinciding with that potential support we're expecting when market comes back. This is daily time frame. You see, this is the black line, right? All right. So this, we are going to refine this. So we can leave this here, but let's put it in this last candle as the order block. That would mean that it has been tested by this big candle. All right, so we refine this order block, we bring it down, here. It's still being tested, it's still being retested down here, and that's why you see the market is going up. You see, here is a proper order block on this time frame, normal. So retested. See, when I identify its invisible order block in the higher time frame, it happened to be a normal time order block in the what? A lower time frame. So here, this other block we still refine. Do we have anything to refine here? We will still leave it here. Remember that the base of this other block now is here. This is the base of this other block. Now, a new other block has jumped in. Whenever it break any structure, I take it. So I take this as the candle before the candle that started the move. You see here, this point has been broken, and the body of the candle is not on the wick. So I take it as a new order block. So you see the places I'll be watching for now. I want to watch the market for 2-hour time frame return here. You get. But on the whole, I'm still be expecting the market to come here before, because if you are taking trade in 2-hour time frame, it's almost like a swing of a kind. You get. All right, so we have done this. Let's go to 1-hour time frame to refine the order blocks there. Let's go to 1-hour time frame. Do we have anything to refine here? Okay, right here we can refine this to here. And then, yes, refine this to here. Okay, this one is cool. I think it's cool here. This one is also cool here. I think it's also cool. Or do we have anything to refine? Maybe just take it a little bit downward to this side. Still, no matter how you do this, this other block has been retested. And since it has been retested, you see market has been going up. This is tested it, and that is one we took as invisible order block, I think from 4-hour time frame, right? Okay, so I refine this here, refine this to this place. All right, so break of structure to the upside, breaking this. I see here as when it broke here. So here, I think this other block is still intact in 1-hour time frame here. All right, so you want to trade in 1-hour time frame, I'll still be expecting the market to come here first before taking a buy. The market to go and come here before taking a buy. I'll later tell you the reason why I like to take a buy with a high risk to reward ratio, like 1:5 or 1:7, 1:10. And you see the reason why I'm not considering taking trades around this here for now. It doesn't have the potential of giving me that kind of risk to reward ratio. So let's go to 30-minute time frame to review refine our order block. So let's start from the one here. This place is far, of course, but we are still leaving it because we're talking about what is going to happen throughout the week. We're expecting the place the market can get to. Market is to be coming down. This is the right place that it should get to before it start going up, so that it will be that it has exhausted its retracement. You get that's the reason why. All right, so we refine this order block. We'll take it here. All right. Now this is another block, and I'm not going to ignore it. So, but let me refine this to here, to this point, and let's see if we can make it bigger so that we can see it properly. All right, so this other block, I'm going to refine it to the top here. Eventually, it's almost coinciding. Remember this black line? This is our potential support when the market is coming back again in the daily time frame. You see that? All right, so this one is okay, this is okay. But here, I told you I don't ignore. This is a break of structure to the upside here. So I still take this other block, and it has not been retested. That's in 30 minutes time frame. It has not been retested. So I'm going to put the mark there. You see, if you're saying that I'm marking my chart and it's getting dirty, and that's how I trade, because I want to look at the chart and see everything at a glance. The areas I'm expecting to watch and see what the market is doing. So that in case the market is getting there, it's telling me when the market gets here, remember you have some work to do here. So that's the reason why I mark everything. And I use 3 charts actually. So the one I use for analysis can be dirty, and I will show you the other 2 charts that I use from different brokers. That's the reason why. I'm taking an other block. I'm taking a horizontal ray as another block, but there's no need for that because I still refining the ones I have, and there's no new one yet. So this one, I'm going to refine it to be at top of this candle. So it's still have been tested. Since this is the last other block that was tested and the market has been going up, could there be a return to it? Can there be a return to it? We don't know, but let's wait and see. So this other block, I'm going to consider this as another block here. Other block breaking above here. Though we can see that this other block is for everything about here and here. So can we put it down? No, I won't like to put this because this place there's a major rejection here. So the market can behave funny after coming here because of the rejection. If it's coming back, it can start to turn back here because of this already rejection, or just cutting a bit and then go up. So for that reason, I'm going to leave that one there and still maintain this. Why am I calling this sort of other block? Because of this high, this small high here. Once it break above it, this is the candle that broke above it. This is the candle before the one that broke above it. You see it? So I'm still taking it as other block. Remember, I say I'm not really treating the normal conventional. I'm trying to add the way the market normally behaves when I was learning it, and that has been helping me. All these areas are just areas to pay attention to when the market is coming there. You get that, right? So refining this other block here. All right, you can see for this time frame 30 minutes, since it came back here, it went back. Remember, this is the first candle that came back to it, and then it goes up, and this one came back to it, and it's going up again. Did you see that? So we still expect a bullish move. All right, so let's go to 15-minute time frame, which is our entry time frame, where we begin to consider. So let's now pay attention very well here. Do I need to like here now? There is a lot of some in fact, I'll consider this place as another block, this as another block, invisible for this big candle. You get? So I consider this place as another block, still consider here as another block. You get? All right, I say just by experience, not really by the normal conventional smart money trading strategy. You get? All right, so I consider here as another block too. Look at this candle, this doji candle here. All right, that's, you see it. So this candle break above it, so it's setting another block, but it has been tested, and since it got tested, the market has been going away further up from there. So this one, I'm going to refine it to put the other block on this bearish candle. All right, so since it was tested, it has also been going up. In fact, it was retested, tested here and was tested again and start going up, and you see here, so now it's been going up. So now let's break this down. We see break of structure here to the upside. Did you see it? And then decide to come down Then here, there is a break of structure. In fact, that one, let's still represent it, but anyway, let's just represent it, sure. And like I said, I represent everything that I see on the chart. All right, break of, okay, comes down, and then here, see break of structure breaking above this now, and we consider here as other block. Of course, it have been retested. You have broken down, retested, kind of. We can see here because here is almost like consolidation, but marking it out is still fine by me. That's what I do. So break of structure going up. Now, if we consider this point, look at as it comes, it breaks below here. If you consider this place as a change of character to the downside, and then coinciding with this other block here and couldn't pass through it, then we can also consider, you see this place, this point, we also consider it as a change of character, taking this candle as another block. And if you see it, it has been tested. Hey, this one is really going to be dirty because of the consolidation. But like I said, it helped me to understand, to see at a glance what I think the market is doing. Let's say this is the other block here. That I'll say if we consider this, because here we are considering this as, we consider here as another block after this place, this place, this bullish candles try to go up or couldn't go. So this bearish candle begin to take it down. So we'll consider it as that the other block, certainly not tested yet, and it break down below. So which means we are seeing change of character, because here it's been going up, but immediately there was a change of character back again to the top, because you can see to up, because you can see here at this place, this even here there is a bearish candle. You don't get, and there are rejection for this blue candle here, but yet this bullish candle came and take it past those rejections. So I consider as another block. So meaning that if you see here a change of character to the downside, here becomes a change of character to the upside. Did you see it? So we're expecting a break of structures after change of character. This one couldn't give us a break of structure, change of character to the downside, no break of structure. But this one, after change of character, here is expected, looking like is want to give us a break of structure to the upside, meaning that we expect the market is still going up. But the problem is that right now, if I'm not in a trade, like I'm not in any trade now, I am not going to take any trade around this area. You know why? Because none of them will give me 1 to 5 risk to reward ratio. And what do I mean? Okay, let's say I take this trade here. I wait for the trade to come here before taking it. What I'm going to have now, I'm going to put my SL below this low, this week here. So that's where it is now. So I put it below it. Then if I take the top to the, let's say to the body of this candle, did it give me 1 to 5? Almost didn't give me 1 to 5. Didn't give me 1 to 5. But I can still wait for the trade here, because it almost give me 1 to 5. I take it to 1 to 5. This is 1 to 5 risk to reward ratio, like that. So which means that where am I going to be expecting to take the market, assuming the market should be coming straight down? It's only here. I'm going to wait for the market here. First of all, this week rejection and this week rejection here could tell me that I don't expect it to go below this week rejection. Do you get it? Although we're having here, because here begin to form liquidity. Okay, let's now take it down below the liquidity here. So you're giving me 140 pip, 150 pip, and I'm going to win how many pip? That 36 pip. 360 pip. I don't like it. This is a little bit above 1 to 2 risk to reward ratio. I don't take that. I take at least 1 to 4. But my favorite smallest risk to reward ratio I take is 1 to 5. That's my favorite. All right. So now, which means that if I'm taking this trade, look at this 1 to 3. This is so I'm not just going to take this trade here, except that I'm going to wait for it actually around here. The reason what I like to do is that if it comes down this way, then we have this high for the market to pass, to take out this high. So if I enter a trade here, as you can see, if I enter the trade here, this trade, assuming this, if I enter the trade here, all right. So you see that my 1 to 5 is going to be, I expect it to take out this side because we're still bullish, right? But this is 1 to 4. So I make it 1 to 5. And I look at it. Is it possible that the market can hit it? I say yes, because we're still bullish. So if you make it down to this point and then decide to continue going up, you understand? It's supposed to take out this high. So that is going the rational, most rational place to take it. And that is going to give me stop loss of 70 pip and then take profit of 420 pip. That's a fair deal. 1 to 5 risk to reward ratio. Did you see that? So this is the place I'll be waiting to take the market. So, but I'm not going to use pending order. I'm going to wait for the market to come down to this place. After coming to that place, then reverses. Maybe there is a rejection, maybe bullish engulfing, maybe hammer around here. I will know it's time to take the trade. I will take the trade and aim to 1 to 5. It can give me 1 to 5 because I will expect it that at least it should get here. And if it gets here, want to start turning back, I will know that it want to start turning back because I'll be watching the market when it get there. I will just get out of the trade. I would have made a lot of profit. But now I'm waiting for 1 to 5. If you hit 1 to 5, I'm just going to lose one if I lose the trade and win 5 times than I lost. And that is my risk to reward that I decide to stick with. So now that's just one of the trades I'll be waiting for to take. What about if the market get to that point and it did not, and comes down and get to that point and it break below it? Then another place I'll be looking for to take a trade is going to be here. This very place. For those people that I don't like to use pending order, but if you like to use pending order, you can use pending order. Take a risk of 70 pip. If I'm using 0.01, you have small money using 0.01, that is going, it's just $7 you're going to lose. But if you win, you're going to win how many? About $42. You see that? So you can take the risk because there's no risk, no reward. If you want to get a reward, you have to take a risk. So now, so if I'm waiting for the market to come to this place, you see I'm going to get 1 to 4. I want to place it below this week, which I don't like. But you know that if you get to this point, I will expect it to make 1 to 5 above here. If you manage to come down here, that means it has actually retraced almost fully from what is expected of it. That means it's going to go up higher. So I can increase this now and make it 1 to 5. Do you see it? But I will be risking 140 pip. If you are using 0.01, you are risking $14 and you want to win $76. You get it? You get it, right? So that is just it. So this is good enough for me because if you come to this point, and then because of this rejection, I'm hoping that it will not break below it because of this rejection, this big rejection. So meanwhile, I am not taking pending order. I'm waiting for the market to get to that place, setting alarm. You understand? Alert when it gets there. You understand? I want to watch what you want to do, and I think so. This is how to win big, because when the market hits the area you have laid your trap and begin to go your direction, you are likely going to win massively big. Did you get it? So if we are using one lot size, for instance, we are talking about winning about 7,000 plus US dollar. That's what you are talking about, 7,000 plus. Do you get it? So that's what we're talking about. So that is how I trade, and that is it for this particular expectation for what the trade is going to do. We're expecting it to do. But remember, what about if the market is actually still going up, meaning that it's going to break another structure here? Kindly wait for it to retest that structure again. This is what I mean. Let me show you using a brush. You see, this is the point. You see the point. Let me come to this place that is clear. This is the point that is still going. Let's assume that it keep going up. You see, it break. So what it did now, it had just broken above here. You understand? And we'll be having another block here. You want to wait for the market. You want to kindly wait for the market to do this. Sorry. You want to kindly wait for the market to do this. You wait for the market to come back to that particular order block. As you want to turn, you see it has made a high. You take the market probably to the high, to the high, that the new high that you make, or a little bit above it. And when you do this, you are certainly going to have massive profit if that happens. That's trading it, assuming it did not come back to the position we are waiting for. This is what you do. As it breaks structure, you come back to the other block that caused the break of that structure. And then what you want to do is that you want to take a trade in that other block and then set your SL below the low. You get it? And take and run your profit. You see what I've done here? So what will this be giving you? This is 1 to 6 risk to reward ratio. If it happens like this, do you see it? So you'll be risking 100 pips to get 670 pips. This is 1 to 6. Did you see that? This is how I trade. This is how I break the market down. But is there any possibility that market can turn and begin to come down? Of course, market can do anything you want to do. But how do you trade that? Then you wait for a change of character. When the market changes character, wait the market to go back to the other block that caused the change of character to the downside. You get it? And then give you an entry trigger, maybe something like bearish engulfing or any other kind of stuff that will tell you that the market. Then you take it away from there and then take it to the next low. For instance, what I do mean is that this is a low here, for instance. Let me hide all this. This is a low here, for instance. Or let's say this low. I'm thinking of this low. After breaking structure to the downside, did you see what I'm talking about? Then what you want to do is that when you retest the other block that caused the break of structure, the change of character, for instance, to the downside, what you do, you take the trade there and then you aim your TP for this around here. That's around the low. This around this particular low. That's just it. That's what you expect. All right. So for the week as a whole, what are we expecting for the week as a whole? So let's go back to daily time frame. The week as a whole, what do we expect? What are we expecting for the week as a whole? For the week as a whole. So what are we expecting? All right, this is what we're expecting. Let me hide all this now. So let's now go to what we're expecting for the week as a whole. You see this point? We are waiting for the market to come to this point. You get it? If it happen to come to the point during the course of the week and give us an entry trigger, bullish engulfing, hammer, or any other candlestick pattern that show that buyers are entering the market, we take it, want to go above this high. You get? That's what we're expecting. But if the market keep going high and high, for intraday traders, of course, what we are expecting is to see break of structures, wait for market to come back to that break of structure, the other block that caused the break of structure. You get it? And then you take the trade and continue to move up like that. For now, we are still bullish and we are still waiting to find bullish trades so that we can maximize profit. Remember, I've given you scenarios and examples of what we are expecting the market to do. So follow it in that light. I'm telling you, you'll be able to do something. But here again, there is another possibility. We are possibly going to come back to the market to analyze to do live analysis. From time to time, we'll be coming to carry out live analysis in the market. So what you need to do is to subscribe to this channel and then turn on the notification bell. When I will have a live stream schedule on YouTube, then you will be notified and you will join us while we analyze. We do live analysis to take trade immediately or to analyze what has happened and the change of plan according to the analysis we have made now. I'll be posting the video immediately so that a lot of people will be able to see it during the course of the week, because this trade we're talking about now is what we expect to keep playing out throughout the week. And like what we want to see is basically that situation that we are seeing change of character, break of structure to the upside, we are expecting it to come back again and for us to take the trade from that point, or change of character to the downside, the testing of the other block that's actually called the change of character, you understand, we want to take the trade to begin to move down, just like that. But for now, we are bullish, very, very bullish. Only change of character to the downside will tell us that we're no longer bullish. We begin to consider a sell trade, depending on the time frame, not every time frame. If you see a change of character in 15-minute time frame or 1 minute time frame, that could be temporary. If you see a change of character in 4 hours, that might not be temporary. Do you understand what we're trying to say? All right, so we're going to trade according to what we have just analyzed now. Expect a bullish market. In fact, we expect the market as it opens to continue going up, at least continue going up until probably the time. Until maybe after hitting this high. If you hit this high, we expect it, anything can happen, but we expect to continue going up until hit this high or make a little bit of lower high from this point. Do you get? So, but if the market happen to come down to this place we have marked out and turn down and turn back, we are hoping that it's going to take out that high or comes down to this place. That's the places we're watching, and the extreme place we'll be watching is also here, except you want to start seeing the change of character to the downside. So that's what we'll be expecting from the market, and be guided with this, and I'll tell you, you will not be disappointed. I will see you in another video. Bye bye.